All right, guys, what's going on? I wanted to make a quick little video here about a trade that I have taken here on gold. Obviously, as you can see, it's been a pretty nice trade, right? Could have held a bit longer, but um, yeah. So let's just get into this. So I want to start here on the. Um, Actually, let's go to the daily chart, not the weekly. I'll start here on the daily chart. So, um, a previous video I talked about how obviously gold has been in an uptrend clearly, but you want to look at the price action um, when price is leaving a large move, right? And you're building either some kind of consolidation, right? Some kind of exhaustion, whatever you'd want to call it. You kind of want to look at that price action to start out with, right? So here, um, I have a large push up, and again, this is a daily chart. And we build here within this. If you go down to a lower time frame, you'll see this even better. We build a really nice accumulation pattern here, right? Um, this is, if you're looking at a crypto chart, you would see this as a really simple accumulation pattern, right? And so then what do? We break up above and we move further to the upside. Here, though, right, more recently, we get a much different setup, right? We sort of end this move to the upside, but it's not the way we do here, right? It's almost like we keep, price keeps trying to push up a little bit higher, and it keeps on continuing to retrace time and time again. And eventually what happens? We get a dump, right? So here we don't have a healthy pullback and a healthy consolidation for price to continue this move to the upside. Here is a much different story, right? And we can get into that more in more detail looking at lower time frames, right? But so what happens, right? We get a dump. Now here with this trade that we took, obviously looking at the daily chart, it's going to look really simple. More of a simplified version of what we did, right? But anyway, we get our move to the downside that basically takes out all of this recent structure, and we did take advantage of that. Um, we took a short position right at about up here. Um, but anyway, that was a retest. Um, so why do we get into this trade? So obviously we get the initial dump, right? And then price here. So this is our, um, at least was our key level of this entire area that we had marked, right? We have a lot of instances of price respecting this area, and so that's why we want to always keep that marked until that changes, right? So we get a break below, right? We come back up. We kind of are building this interesting structure, right? Kind of just bouncing around. We had about 2 days of really nothing going on, pretty frustrating. Really just need to be patient during those kinds of days, right? Because the setup like this will come, but you need to be patient until it does come, right? Um, and so, during those days where, like, within here, it was pretty frustrating just watching price do its thing, right? It didn't really have, much of a direction, but of course, again, why is that, right? We have a nice sell-off that we took advantage of. Not the entire move, part of it got out a little bit early, but it's all good. Um, right? We get a sell-off, and then right? That's followed by a bit of messy price action, and then we get another move, right? So, okay, after this move to the downside on the daily chart, after this large candle here, right? What we are looking for is some form of exhaustion, which we got, right? These two daily in between these two daily candles, and even partially this bearish candle with the long wick, we get some sort of exhaustion, right? Some sort of retracement after a large move, right? And what we're looking for, since this large bearish candle is confirming our direction, we are looking for some sort of exhaustion into a level, and we're looking for a level that is likely for price to turn around, right? That's the simplest way to put it. We're looking for an area where we are expecting price to retrace into, right? And then find some resistance, or if we're the other way, find some support, and then continue our in the trend in the direction of our initial move, right? Which is this. So that's really the only thing I was looking for going into this trade. Don't want to overcomplicate it. Keep it extremely simple. That's it, right? We have an uptrend. We get a big move to the downside. We're looking for a big retracement, which we get, and we're looking for an area of retest where we can expect price to then from that point continue the move, the initial move, right, in that same direction. So um, okay, so why here? So a lot of times, if we go to the 4 hour, you will see this. A lot of times you can make zones in between. You want to look for a large candle, which is a high volume candle, and you can look for structure in between the um, the most recent structure before the candle and after the candle, right? So that would be this wick and this wick here, and that can create a nice little zone for us. Now, um, this sort of falls in line with a lot of the newer philosophy, newer methods of looking at the market. And I'm not that big of a follower of that kind of stuff, but I still have, certain things kind of cross over, regardless of what kind of strategy you're using, that sort of thing. But this isn't the main thing I'm looking at. So what I'm looking at, what I said is that we have our initial push, right? We are looking for a retracement, which we get. What we're looking for an area where we can expect price to retest and move lower. So a lot of times what I will do is I will sit back, really sit on the sidelines, sometimes a couple days with no trade, and I will wait for a new level to be made, right? A new local high to be established in this case, right? So that is this area right here, right? Um, that is this area. And so you wait for that to be established and price to move in your direction a little bit. And then you are looking for another retest up into the level of the local high, right? So if we made that zone on the 4 hour chart, right, and we have this level, even without this zone, right, even without the zone, um, we have this as our local high. So once price comes up here, right, we don't know exactly where it's going to stop. So this could have really gone higher. It could have even gone, could have ended up anywhere. This high could have been here or up here, right? But the fact is that it's here. So we wait for that to be established, right? We risk maybe losing part of the trade if this just continues down, right? But then once the high is established, we wait for a retest into a resistance within this local high. So we're not looking for, it's not like we're looking for price to come up here, you know, and make a double top with this level right here. We're not looking for that. We got the move down. We know our initial bias is going to be bearish, right? And again, why is that, right? We get the price action, the interesting price action going into this crash, which is why we get the dump, right? It would be a different story if we had something like this, but we get this, right? This is not healthy bullish price action. If you're investing in a meme coin and you see it start to do this after having a nice accumulation pattern, you're going to get a large bearish candle, right? That's just kind of how that works. And so then we look for the retracement and we look to identify, and really my way is I wait. I wait for a local high to be made, and that is this level. And then, right, we come down and we get a retest of this area. So this zone is really, again, more of a general zone. It's not too precise, and obviously, you could maybe adjust it a little bit if you would like to. But I got into this trade actually a little bit early. As you can see, we weren't even at the zone. So a little bit more drawdown, but it's really no big deal at all. And obviously, you would want your stop loss here because this local high is the top wick of the previous daily candle. And so really, when you're doing this, you want, obviously, you see how all the time frames kind of work together and kind of correlate to each other. But you want, as a rule of thumb, you generally want your stop loss to be above or below some daily level, right? Which in this case it is. But the textbook way of entering this trade would have been obviously to wait until we get into the zone. And then obviously you wouldn't really have any drawdown at all. And then we just got out the bottom here. But what the point I'm really trying to make is when you get this kind of price action and you get the initial move, right? So from here, we're not looking for places to buy, right? We'd be looking for a continuation of this most recent move, which is the sell-off. And so instead of just waiting for the next retest of a major resistance, which would be right here, right, and going short there, after a large sell-off, you can have more of a larger, more gradual move to the upside, a more gradual or a larger retracement. after such a high volume sell-off, you're not going to have immediately, right? It's not going to immediately be followed by another high volume move just like this. It needs time to be, to exhaust, right? It needs time to retrace and sort of cool off, I like to say. And so what you do is you wait. Like if we had a massive, very key zone up here that was, price action was a bit different, we would be, more than likely anticipating and sort of waiting for price to move into that zone before we get bearish, right? But here, what we're really doing is we're waiting for that local high to be established. And so once it's established here and we come down, then this is our new reference point. We have this. We know that we're going to try to, our bias is that we're going to continue this move, right, in this direction of this sell-off, but we need the right, the right signs, the right indication to that, we're approaching that time where we are going to reverse and move back in our trend, right? So here, right, if we look at the 4-hour, the zone is really within this bearish candle and the close of the bearish candle and open up, or close of the bullish candle and the open of the bearish candle, right? So like I said, more the textbook trade would have been to get in, once we reach into the zone with a stop loss above the zone, which is the previous daily candle high, right? So again, I hope that makes sense. It's really, some of it's hard to, unless it's just me, I find it difficult to put into words, but it's not so much, oh, just trade support and resistance. It's everything kind of in confluence with each other, right? It's not so much, oh, you have to wait until we get to this resistance level and then you can short it because, it's going to crash from the resistance. It's really sort of, reading the price action and constantly checking the price action periodically throughout the day. And you sort of kind of get in a somewhat of a flow state of understanding it, right? And so, um, there was no need to, necessarily wait for price to try to come match this and get a nice double top, right? Um, we have our local high established, right? We're going to come back up and fail to break it, and then we're going to roll over, right? So, yeah, anyway, this is a quick little update on gold. Our last trade, I believe our last trade was, have to go back and look at exactly where the entry was, but it was about right here, and it's the same kind of thing, right? I think we got out about somewhere down there. And it's the same kind of thing. We're not waiting for this local level right here to be matched, right? We're not waiting for this, right, to go short because we know that, right, we failed to break this. So this is our new local high. We're more than likely going to fail to break this before we roll over. And again, that is because of the price action leading up into this, right? This is not bullish accumulation right here whatsoever. So anyway, just a quick little update on this, and I hope that's helpful for you.